Okay, so you sent us quite the collection this week, all focusing on Avalanche, or AVAX. Let's just jump right in. AVX is currently trading around, what, $19? We saw like $18.95, maybe $19.35 somewhere else.
Yeah, roughly in that ballpark. And it's got a market cap pushing, well, nearly $8 billion.
Which brings us straight to the big question you're obviously asking. Is AVX, going to the moon? Is it the next big thing?
That really is the multi-billion-dollar question, isn't it? And what's great about the sources you pulled together, things like the analysis from 99 Bitcoins, those Changelly price predictions, info straight from AVX network on subnets, even that Reddit thread on holding long-term, plus stuff from Investopedia and validator details, is that they give us a lot to work with. So our mission here in this deep dive is to kind of sift through all that, cut through the noise, and really get a handle on AVX's potential.
Exactly. Because you're clearly looking into AVS pretty seriously. You've done the initial digging, and now you want that deeper understanding, but maybe without getting totally bogged down in crypto speak.
We get it, totally.
So whether you're like deep down the crypto rabbit hole already or just exploring, we're going to try and break this down, make it clear, engaging, hopefully spark a few aha moments. So let's start at the beginning. What is AVX fundamentally?
Right. So at its core, AVX is a platform for decentralized applications, dApps, using smart contracts. It comes from Emin Ginsire. He's a Cornell professor. And his team at Avalabs, folks like Kevin Siknicki and Mofan Tedyan.
Okay.
But there's a fun little backstory. The original white paper, way back in early 2018, was actually put out pseudonymously by a group calling themselves Team Rocket.
Team Rocket. Seriously, like Pokemon.
Apparently so. A bit of crypto mystery. It wasn't widely known. Sire and his team were behind it until around May 2020. He even tweeted about Happy Avalanche Day, marking 2 years since that paper dropped.
Okay. Adds a bit of color.
Yeah.
So beyond Team Rocket, what was the main problem they were trying to solve? What gap were they aiming to fill?
Their main goal, really, was tackling what everyone calls the blockchain trilemma. The challenge of getting scalability, decentralization, and security all at the same time without sacrificing one for the others.
Right, the classic balancing act.
Exactly. So they're positioning themselves against the big players, Ethereum, Solana, even Bitcoin in some ways, who all handle that trade-off differently.
Okay, so that was the vision. How did they get from that 2018 white paper to where AVX is now in April 2025? What were the key steps?
Well, after the paper, Avalabs was formally founded in 2019, and they got busy actually building the network. Mid-2020 saw the Denali testnet launch. That was the first chance for developers to really play around with it.
Start kicking the tires.
Pretty much. Then, late 2020, the mainnet went live. That's when the AVX token itself appeared. People could trade it, stake it, become validators, build dApps, the whole shebang.
And things really started heating up then.
Yeah, especially in early 2021, they launched something called Avalanche Rush. It was a huge liquidity mining program, like $180 million in incentives that really lit a fire under DeFi on Avalanche, pulling in big names like Above and Curve.
Okay, the money talks, incentives work. And you mentioned subnets earlier. When did they enter the picture?
Subnets came along after that initial DeFi boom. They're basically a way to create custom blockchains within the Avalanche ecosystem. Think of them as specialized side networks.
Okay, we'll definitely need to circle back to those. Any other major milestones recently?
A big one was in 2023, they announced a partnership with Amazon Web Services, AWS. That's pretty significant for making the tech more accessible and driving wider adoption,
Definitely. AWS is huge. Okay, so AVAX is tackling this core problem. It's hit some milestones. Let's get into the tech now. What's actually different about Avalanche under the hood compared to competitors?
The really groundbreaking part is their consensus mechanism. It's not proof of work like Bitcoin, and it's different from typical proof of stake, too. They use this probabilistic metastable consensus.
Probabilistic. Okay, what does that mean in simple terms?
Think of it like a super efficient gossip network. Small groups of validators quickly poll each other over and over. They don't need everyone to agree at once. Consensus emerges really fast through this repeated sampling. That's why transactions finalize so quickly, usually just 1 or 2 seconds.
1 or 2 seconds, that's incredibly fast.
It is, and it lets them handle a massive amount of transactions. We're talking over 4,500 transactions per second, TPS.
Whoa. And compare that to, say, Ethereum.
Ethereum's currently hovering around, 30 TPS? Maybe a bit more sometimes, but yeah, it's a different lead in terms of raw throughput.
Okay, that speed is a major differentiator. And I remember reading about a tri-chain structure. How does that work?
Right. They split the core functions across 3 specialized chains. There's the X chain, the exchange chain. That one's optimized for creating and swapping assets super fast.
Makes sense for the speed.
Then you've got the C chain, the contract chain. This is the one that's compatible with the Ethereum virtual machine, the EVM. Big advantage here.
Why is that so important?
Because developers can take their existing Ethereum dApps, written in Solidity, and deploy them on Avalanche, often with very minimal code changes. It lowers the barrier to entry massively.
Smart. Easier migration. And the third one?
That's the P chain, or platform chain. This one coordinates the validators, manages staking, and it's where you actually create and manage those subnets we mentioned earlier.
So X for assets, C for contracts and EVM compatibility, P for platform coordination and subnets.
You got it. Each chain playing to its strengths.
And this whole setup, the fast consensus, the 3 chains, that's what leads to those benefits people talk about, like low fees and high speed.
Exactly. The fees are tiny fractions of a cent, often. And you get that really high TPS. It's their answer to the scalability part of the trilemma.
Okay, impressive tech. Now let's pivot to the market side. What did that 99 Bitcoins analysis say about the price action and technicals?
Well, they pointed out the history, the big run up to about $146 back in November 2021, driven by that Avalanche rush hype and the general bull market.
Right, the peak.
Then, like everything else, the 2022 bear market hit hard. It dropped down into the $18, $20 range. But they highlighted the recovery since then. It almost tripled from those lows.
A decent bounce back.
Yeah. And when they did their analysis, the price was sitting right on a key weekly support level. It was also forming this pattern called a descending triangle.
Which usually means?
Often technical analysts see that as potentially bullish, like it could break upwards. They also looked at the RSI 14 indicator.
The relative strength index.
Yep. And it suggested AVX might be bottoming out, kind of consolidating. So that potentially supports the idea of a pump, maybe towards the $60 resistance level if things break right.
$60. That'd be a nice jump from 19.
It would. But they were quick to add the usual caveats. The whole geopolitical situation makes predictions tricky right now. Still, they noted the general optimism floating around in the crypto space.
Always got to factor in the macro stuff, yeah. Okay, what about Changelly's price predictions? They looked way out, didn't they? Even to 2050.
They really did. So as of April 17th, 2025, they had the price at 19.3499 dynes. But interestingly, their super short-term forecast was actually a bit bearish. They expected a possible dip down to around $17.69 just a couple of days later.
Huh. So short-term caution from them.
Seems like it. Their market sentiment indicators were mostly bearish at that moment, and the fear and greed index was showing fear. They did mention, though, that AVAX had a fair number of green days in the past month, but also pretty high volatility, around 7-8%.
Volatility is the name of the game, I guess. What about the rest of 2025, according to Changelly?
They gave monthly ranges. For April, they saw it between roughly $16 or $19.30, averaging around $17.67. May looked a bit better, averaging closer to $20. And then looking towards the end of the year, December 2025, they predicted an average around $33.39, potentially hitting a high of $36.20. So gradual optimism through the year.
Okay, a slow climb in 2025, and then further out, 2030, 2040.
Yeah, the numbers get bigger. Average price predictions were like $34, $35 for 2026, nearly $50 for 2027, over $70 for 2028, cracking $100 in 2029, and then around $165 for 2030.
A steady upward trend in their model.
Pretty much. And then, they threw out some wild numbers for 2040 and 2050, averages in the thousands and even tens of thousands. But, they rightly put a huge asterisk next to those. Predicting that far out in crypto is, it's pure speculation, isn't it?
Absolutely. Fun to look at, but take it with a massive grain of salt. Did Changelly mention any specific expert takes?
They quoted a few. Lark Davis was bullish, thought maybe $100 by 2025. Someone at the Portugal News was more conservative, like $65 back in 2023. Digital coin price was pretty muted, maybe $20, $25 for the next couple of years, hitting $30 by 2025.
Oh, all over the map, really.
Exactly. And then Wallet Investor was super optimistic, suggesting maybe $240 by 2027. It just shows you, nobody really knows, right? Lots of different opinions out there.
For sure. Okay, let's circle back to those subnets. This seems like a really core part of the Avalanche value proposition, mentioned everywhere. Can you break down what they are and why they're such a big deal?
Definitely. Subnets or subnetworks are key to how Avalanche scales. Think of them as custom-built, independent blockchains that live within the main Avalanche network. The AVX network itself explains them as specific groups of validators that agree on the transactions for one or more blockchains.
So like networks within the network.
Precisely. Even the main network, the primary network with the X, C, and P chains, is technically a subnet itself. And you can keep adding more subnets as needed. It's dynamic.
How does that help with scaling, though? How does it solve the congestion problem other blockchains face?
The main thing is they divert traffic. Instead of every single transaction having to be processed on the main chains, specialized applications or ecosystems can run on their own dedicated subnet. This offloads work from the primary network.
Oh, okay. Like adding more lanes to the highway.
Exactly. And crucially, every validator on a subnet also has to be a validator on the primary network, staking at least 2,000 AVAX. So you're not sacrificing security, you're still anchored to the main network's security guarantees.
That's an important point.
Yeah, and they contrast this with, say, layer 2 solutions on Ethereum like optimistic rollups. While those help scale, they can have drawbacks like potential delays if there's a dispute, or relying entirely on layer 1 security plus smart contract risks specific to the L2. Subnets offer a more integrated, customizable approach.
And wasn't there a big push to encourage subnet development?
Yep, back in March 2022, they launched the Avalanche Multiverse program. It was like $290 million in funding specifically to encourage projects to build and launch their own subnets. Shows how central it is to their strategy.
Okay, so what are the tangible benefits for developers or users choosing to use or build on a subnet?
Several key advantages. First, scalability because they run independently. Subnets can handle high transaction volumes without bogging down the main network or other subnets. This usually means lower gas fees within that specific subnet.
Lower fees are always good.
Always. It also contributes to higher overall TPS for the whole Avalanche ecosystem. There's potential for easier interoperability between subnets down the line, too. And validators get to choose which subnets they want to validate, focusing on ones they care about.
But the biggest thing seems to be customization.
That's probably the most powerful aspect. You can basically design your own blockchain rules.
Like what? What can you customize?
Almost anything. You can decide the fee token, use AVX, or create your own custom token for your subnet. Make it permissionless, open to anyone, or permission-restricted access. Set specific hardware or uptime requirements for your validators.
Okay.
You can even make the blockchain private instead of public if needed. And you can design totally custom economic incentives for your validators, maybe rewarding them in AVX, your own token, or something else entirely.
Wow, that's incredibly flexible. It really is like building your own blockchain, but with the underlying Avalanche security and speed.
That's the idea. It's why the AVX network folks argue subnets are a genuine solution to the blockchain trilemma. They allow for secure, scalable, and decentralized blockchains tailored to specific needs, all operating on Avalanche.
You can see how that could attract a lot of different projects. Are there examples already?
Yeah, a big one often mentioned is DeFi Kingdoms, a popular blockchain game. They launched their own subnet, DFK Chain, partly funded by that multiverse program. It helps them manage their game's specific transaction needs without interfering with or being slowed down by other Avalanche traffic. Gaming, NFTs, specialized DeFi protocols, these are all prime candidates for subnets.
Makes sense. Okay, shifting gears slightly. Let's look at it from an investor's point of view, especially someone already holding AVX. That Reddit thread you found from user Roses123 seemed interesting. They got in at $13 and were wondering about holding long-term. What was the vibe in that discussion?
It was a really fascinating look at community sentiment. The overwhelming feeling was definitely, hold on for dear life. A lot of people felt strongly that AVX would not just revisit its old all-time high of around $146, but potentially go much higher, maybe even $250 or more in the next bull run.
Especially getting in at $13, that's a nice position.
Exactly. That low entry point made the long-term hold very appealing to many. Staking was also a huge topic. Lots of recommendations to stake AVX to earn yield while holding either directly on the network or using liquid staking platforms like Benqui.
So mostly bullish conviction. any dissenting voices or more cautious strategies discussed?
Oh yeah, it wasn't all just blind optimism. Some people suggested more risk-managed approaches. Like one idea was to sell maybe a third of your holdings once it hit a certain target, say $40, just to recoup your initial investment. Then you're basically playing with house money.
Take some profits off the table.
Right. Others talked about maybe selling in stages as the price goes up, or waiting for the previous all-time high before deciding. Diversification was mentioned too, taking profits and moving them into maybe Bitcoin or other assets. We saw those bold predictions, like over $100 next year, or holding till $250.
So a mix of holding strong and strategic selling. Any warnings or potential pitfalls brought up?
Yeah, some important reality checks. Someone warned about getting stuck in an echo chamber online and stressed using stop losses. Another suggested maybe Ethereum was a safer bet. The upcoming Bitcoin halving was discussed, so there might be a dip before it.
Always uncertainty around those big events.
For sure. And there was a lot of emphasis on how to hold and stake safely. Big warnings about leaving coins on exchanges. Strong recommendations to use cold storage like a Ledger hardware wallet, specifically using the Core app and understanding the C chain for managing AVX securely.
Security is paramount, definitely.
Absolutely. People were sharing tips on how to do it right, and there was some discussion comparing AVX to competitors like Solana or protocols like Avi, wondering how it might perform relative to them. So yeah, a good mix of enthusiasm, strategy, and practical advice.
Sounds like a healthy discussion, actually. Okay, last major piece from the sources. Validators and staking rewards. How does that system work on Avalanche? What's the incentive?
So both the official docs and Investopedia cover this. Validators are essential. They run the nodes that secure the network by participating in that snowman consensus protocol we talked about.
Right, the proof of stake part.
Exactly. And for doing that work, they earn rewards paid out in new AVX tokens. To be a full validator yourself, running a node directly, you need to stake a minimum of 2,000 AVX. That gets you validating on the primary network and allows you to validate subnets too.
2,000 AVX is quite a bit for many people.
It is. But as the Reddit thread showed, even if you don't have that much, you can still delegate your AVX to an existing validator through various dApps and earn a share of the rewards that way. Generally, the more you stake or delegate, the more potential rewards. And validators are incentivized to be reliable, high uptime, and quick responses mean better rewards.
Are there risks for validators, though? What if they mess up or try to cheat the system?
That's an interesting point Investopedia raised. Unlike some other networks where malicious validators can get their stake slashed or taken away as a penalty, Avalanche currently doesn't slash staked AVX for bad behavior or poor performance. That's a design choice, maybe seen as a pro by some, a con by others.
That is different. No slashing. Does Investopedia mention anything else notable?
They also touched on governance. AVX token holders get to vote on network proposals. Things like changing the rate at which new AVX is created or adjusting transaction fees. The community has a say in how the network evolves.
Okay, so validators secure the network, staking provides the incentive, and governance allows token holders to participate. Got it. So let's try and wrap this all up for our listener. After digging through all these sources, what are the absolute key takeaways about AVX?
I think it boils down to a few core things. First, the tech is genuinely innovative, that fast consensus, the specialized tri-chain setup, and especially the subnets. Subnets really stand out as a powerful tool for scaling and customization, potentially solving problems many other blockchains struggle with.
The tech is a major factor.
Definitely. Second, the price outlook. Well, it's mixed, isn't it? Short-term volatility and caution, according to Changelly's indicators, but longer-term predictions, while speculative, showed general optimism. And the technical analysis from 99 Bitcoins saw potential for upside based on current patterns.
So potential, but uncertainty. Classic crypto.
Pretty much. Third, those subnets, again, they really are key. They offer tangible benefits like lower fees, higher speed for specific apps, and that incredible customization. We're seeing them used for gaming and DeFi already. And finally, the community sentiment, judging by that Reddit thread, seems pretty strong on holding long-term, with staking being a very popular strategy.
Right. Innovative tech, mixed but potentially optimistic price outlook, powerful subnets, and a committed community.
And hopefully this deep dive has helped clarify all that without making your head spin. Our goal was really just to give you that informed shortcut.
Exactly. Cut through the hype and the FUD.
So as you process all this, here's something to maybe chew on. We talked a lot about DeFi and gaming using subnets. But given Avalanche's unique design and that customizability, What other real-world industries or applications, maybe ones we haven't even thought much about yet, could be seriously disrupted or improved by this kind of technology? And maybe just as importantly, what are the biggest roadblocks or challenges that might stop that from happening?